What are the penalties if you took out $100,000 from either your Roth or pre-tax TSP account? Well, if you've ever wondered that or how to use your TSP in retirement, then stay tuned for this FERS Federal Fact Check. Today we have a question from Charles that's talking about his TSP account and taking out $100,000. And I think something must be going on because we've gotten a lot of these types of questions coming in, which is just great. His question is, hello, I'm retired and 58 years old, federal employee that retired after 34 years of service. My wife and I are looking to buy a trailer and horse camping around the United States. That sounds like a lot of fun. I have both the traditional TSP and Roth TSP. I wanted to know if there are any penalties if I withdrew $100,000 from either of my TSP accounts. I know any money from my traditional TSP account will be taxed, but I was concerned about penalties that the IRS would impose. Charles, that is a great question, something few people ask about penalties, because it's not just about taxes as you stated, but about the penalties that you might pay. A couple of things to think about, right? Number one, you're talking about, and I'm going to go back to our tax buckets, which are here to talk about a couple of rules. We have our ordinary income tax bucket. That's going to be your wages. You said you were retired, so that's going to be your 1099-R. That's going to be your FERS retirement income they have coming in. This is Social Security could be in here, dividends and interest. I know you're too young for Social Security, but in the future, right? That's what's going to be in that bucket. The next bucket you had already talked about was the tax deferred bucket, and this is where you have some TSP money. You also have some great money in your in the last bucket, which is your tax-free bucket, which is awesome. And this is going to be your TSP Roth account that you have. Now, the beautiful part about this tax-free account is that you pay no taxes on this money if you meet the rules. And this is going to be a little what Charles is talking about. So a couple of things on TSP distributions. Number one, Charles, you said you were 58 years young, which is great, and retired after 34 years. I am making an assumption that you separated from federal service at 55 and older. If you separated from 55 and older from federal service, then yes, you are correct. You can pull out $100,000 out of your TSP account. We could pull out $100,000 and pull it out, and you would have to pay ordinary income taxes, but there's no penalties. If you were 54 and separated from federal service, assuming not law enforcement, then there would be a penalty, which would be 10% because it's an early distribution. This is your separation date, really, really important. So I'm making an assumption you separated at 55 or older, more than likely 56, 57, when you hit your MRA, your minimum retirement age. So if that was the case, you can reach into this pre-tax or tax deferred bucket. You could pull out $100,000. You got to pay taxes on that money, but there's no penalties imposed by the IRS. So that's outstanding. But what about the second question that you had about the Roth? The Roth, you have to meet two rules in order to pull money out of the Roth IRA and pay no taxes, or excuse me, no penalty on the money and no taxes. Rule number one is you have to be older than 59 and a half. 59 and a half or older. This is different than this rule up here. We talked about pre-tax, right? What do we say about pre-tax? You had to be separated from service at 55 or older when you separated in order to get access to this money. Okay, perfect. Roth money, 59 and a half. And this is not or, and rule number two, you had to have been in the Roth for 5 years. This is not rolling 5 years. This is when did you first start it? Let's say you first started a Roth account in 2020. Great. 5 years would be 2025. You cannot take a distribution from that account until 2025. So what's a distribution? A distribution is you going into this and sending the money to yourself, right? That is a distribution. If you wanted to move this to a Roth IRA, just at Schwab, Vanguard, whomever, right? Some other custodian for some reason, is that a distribution? No, because we're staying inside of this tax-free bucket. You can move and you can do a transfer regardless of age, regardless of that 5-year rule without a problem. But in order to take a distribution, which is when you want money to go to you, then you have to meet these two rules. So there very well could be a penalty on the Roth money. I would hit the pause button real fast and really make sure you understand those rules and how it's set up. There's a few caveats on contributions, etc., which get into a little more details, but I would say I'd probably be focused on this tax deferred bucket. You know, another thing that we might want to be thinking about, Charles, as you're going through this, whenever we're going to pull a lump sum of money out to buy something, one of the things that I always want to know, can we spread that out over a couple of years? I had a couple clients building a barn, buying horses, etc. What we ended up doing was getting a home equity line of credit and paying for it all at once because they wanted it done all at once. Then we ended up paying off the home equity line of credit over 3 years. Why? Because in their situation, I could take out about 30 grand a year out of their TSP account and keep them in a lower tax bracket. But if I pulled out $100,000 at once, I jumped their tax bracket and it was punitive. Now, it's not a penalty, it's just taxes, but I consider it punitive because it forced you into a higher bracket. So it's something to think about. It doesn't work all the time, but it's an option that you have, and options really give you choices in retirement, and it gives you a lot more freedom. So it's something to think about. If you have ever wondered, how are taxes going to affect my retirement? What's a distribution strategy to make sure you don't outlive your TSP? Or what are you going to do when you have those big one-time expenses? Then that's why we're here. You might want to contact us and work with myself or one of our advisors in our team to help you, because we specialize in helping federal employees make successful decisions about their retirement. If you have a question, feel free to submit it, leave it in the comments, because we'd love to hear from you. And until next time, happy planning.